Hello and welcome to another update video about Tesla. In the previous videos, we talked about this upcoming rally into the red resistance zone. It seems like that price now reacted to the golden ratio. I'm going to zoom in a minute, so we are going to take a look at the odds and likelihood that or if the B-wave rally here could be done. Bigger picture, we count here a potential wave 4 low in place on the 9th, or no, actually the 6th of January 23, and then price moved up in a so-called 1-2 structure. And this is now getting interesting because this is the bullish variant and version that we're currently tracking. Basically what we're doing, we're tracking the bullish scenario because we give it decent chance of working out. Then we're tracking the microstructures to understand when a lasting low has formed. Okay, so at the moment it's too early for me to confirm that a low has formed, so I still expect lower prices in the short term. And if price drops below support, then we have to abolish this bullish scenario. There will be one more bullish scenario left, which is this one, A, B, C, inner wave 1 in yellow within a larger diagonal, that we have a chance to come down in a larger wave 2 correction. And the support for this scenario is $128. The support for the more bullish scenario is $176. So if 176 breaks, this is the sign or signal that the white wave count has to be taken out. And then we still focus on the yellow one, which allows for a deeper pullback down to 128. However, this is not a very reliable scenario, so I will then, if $176 breaks, because that's our relevant support, I will then put a bearish scenario on the chart. We already talked about it, of course. This could simply be an ABC structure in a larger B wave, okay, and price is now coming down in 5 waves. If we see 5 waves below support, that's a signal that, okay, look, this is going to go to below $100 again, potentially even, because we would then get possibly below the January low. So this is a bearish scenario, absolutely possible. However, no point focusing on it as long as we are above bullish support. This is a fairly bullish structure here, a so-called 1-2 setup. Let's see. Okay, let's see. What is typically good to see, and that's sort of what we like to see ideally, if we have a 1-2 setup and another 1-2 afterwards, that the wave 2 of the second 1-2 setup doesn't retrace as much as the first one. However, I think it's going to be that way. It already is, because it already retraced 50%. So it's just, again, no guarantee for this bullish scenario to work out. However, at the moment, that forecast of the B-wave rally worked out nicely. So let's zoom in and take a look. In the last video, we even looked at the microstructure, and I haven't really changed this wave count at all. I think we had the wave 5 a little higher, but what we expected in the last video was one more high, and it did that, even though it was just a marginally higher high, but only one more high potentially here in the 5th wave of the C wave. So let's take a look at all of that in detail. First of all, we had here that top in place in July. Price came down in an A wave. We then said that above the trend line, we have a confirmed B wave rally, maybe even something more bullish, but primary scenario on this time frame would be it's just a B wave rally. And that was quite a good signal. Okay, we talked about that in many videos anyway. We had the A and the B of the B wave already on the chart. And then we looked at the microstructure in the last video and said, okay, we had possibly here wave 1 of wave C as a leading diagonal, wave 2 pullback, wave 3 rally, 4 and 5. Now, I wouldn't be opposed to one more high, but it's now getting unlikely with that drop today. Okay, so price came into the middle of our resistance area for a B wave and basically reacted to the golden ratio. So if price now continues to drop next week, and stays below the $261 level, so today's high, I assume we're now coming down in a C wave. We can now use the information we have and the data to calculate a target for the C wave. And I will use here the length of the A wave, then we go to the high of the B wave, and a key target would be the 1-to-1 ratio, the 100% extension level, $185. That's going to be a key level that I'm going to watch on the way down. That's a key projection. It could be a bit shorter, yes, but this is a key projection and it needs to hold above $176 to consider still a bullish scenario. If we see a sustained break below support, then it would be an indication for something much more bearish. But at the moment, this worked out nicely, reacted where it needed to. And let's see now if we get into this orange box. I would now assume we will do in the coming weeks. Yeah, I mean, this rally took a couple of weeks. Yeah, the move down took a month basically. So yeah, it could be another month maybe, roughly, okay, for this to play out, depending on if it's an impulse or just an ending diagonal to the downside. Would fit nicely into the narrative of a potential year-end rally that we often see in the stock market. And then the third wave rally can obviously go way higher, but we cannot really give a target for that third wave rally yet because of, well, we don't have a wave 2 low in place, right? Only then I can calculate a target for a third wave. That's basically my update and analysis about Tesla. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.